Welcome to Wealth Creation Series, where we learn and grow together with one goal, the goal of creating wealth. If you like this video, please hit like and subscribe to this channel. Welcome back, everyone. As always, in the first part of the episode, we'll talk about the news and then we'll talk about how to use the Vanguard website and screen ETFs or mutual funds, and that I hope will help you pick ETFs better and make you more money. So stick around. In the first episode, we have the news about tech giants' antitrust meeting where chief executives defended themselves in Congress against the antitrust allegations. Then we have news about the latest GDP numbers and a crazy earnings season. So let's dive in. Yesterday, lawmakers squared off with the chief executives of tech industry's four titans: Amazon's Jeff Bezos, Apple's Tim Cook, Facebook's Mark Zuckerberg, and Google's Sundar Pichai. The House Judiciary has been engaged in a sweeping investigation for each of the four companies, honing in on how they stifle competition in the tech industry. These companies have been accused of consolidating power for a long time, and now Congress is getting ready to do something about it. Worth nearly 5 trillion in combined market capitalization, added gains yesterday even as their chief executives defended themselves in Congress against the antitrust allegations.
Markets are predicated on the idea that if a company harms people, consumers, workers, and business partners will choose another option. We're here today because that choice is no longer possible. The purpose of today's hearing is to examine the dominance of Amazon, Apple, Facebook, and Google.
For years, antitrust experts have been building the case against the big tech companies' questionable acquisitions, predatory pricing, and copycat behavior. The CEO has to face those arguments head on Wednesday. These are four very different companies, but the committee used Wednesday's hearing to show how similar they were when responding to their competitors. In particular, the committee looked at how each company controls the distribution and how they use their market dominance to suppress competition. The committee argued that companies like Facebook and Google use information which is collected and disseminated in a predatory way. The same goes for Apple and Amazon, but when it comes to their App Store and Marketplace.
Amazon runs the largest online marketplace in America, capturing 70% of all online marketplace sales. Despite a litany of privacy scandals and record-breaking fines, Facebook continues to enjoy booming profits, $18 billion last year alone. Google is the world's largest online search engine, capturing more than 90% of searches online.
Through the hearing, lawmakers argued that each company used its dominance in the tech industry to keep a watchful eye on their competitor. Google's CEO faced tough questions from lawmakers who feared its dominance in the search, which allowed it to monitor the web traffic from its competitors. This information allowed them to rank their competitors low in the search results.
We used to have a policy that restricted competitors from using our platform.
Okay, Mr. Zuckerberg, these examples and supporting documents strongly suggest that Facebook does weaponize its policy to undermine competitors.
Isn't it true that Amazon refers to third-party sellers as internal competitors?
We've interviewed many small businesses, and they use the words like bullying, fear, and panic to describe their relationship with Amazon.
Wednesday's hearing was just the beginning. In a few weeks, the committee will publish a final report detailing how large firms allegedly violated antitrust laws and what they can do to fix these problems. The US economy saw the biggest quarterly plunge in activity ever. Though the plummet in the second quarter wasn't as bad as feared, the GDP falling a historic 32.9% versus the economics surveyed by Dow Jones were looking for a decline of 34.7%. Neither the Great Depression nor the Great Recession nor any other slump over the past 2 centuries have ever caused such a sharp drain on the economy. By comparison, the worst quarter during the financial crisis of 2008 was the 8.4% GDP drop in the fourth quarter of that year. This has led to the market opening in red today. Next we have Procter & Gamble, the consumer essentials giant. The company saw the largest sales gain for Procter & Gamble since 2006. Its organic sales rose 6% following a similar increase last quarter, making the strongest annual sales gain since 2006. The company was expecting a sales growth of just 3 to 4%. The strongest sales growth was in the fabric and home care unit, which showed its highest ever sales gain at 14%. This unit's brands include Tide, Mr. Clean, Dawn, and Cascade. On the whole, with the health, hygiene, and cleaning, consumers habits have changed forever. Maybe not to the degree that happened recently, but it's hard to imagine that it'll smack back to the old world. On the other side, we have companies like Boeing, which posted far more losses than the consensus. It slashed its production outlook, forcing it to consider factory consolidation and more layoffs. Boeing stock fell. Its commercial aircraft sales also fell 65%. Boeing announced earlier this month that it has delivered just 20 commercial jets total in the second quarter, the lowest amount for the quarter since 1977. That's down from 90 in the year ago. So in this next section, I will walk through how I select mutual funds or ETFs. I won't go into what are mutual funds or ETFs. You can easily find that out by doing a Google search. What I'm going to do is walk you through the process of selecting them. For this example, we'll be using the most popular Vanguard funds. So if you are new to investing, you will also learn how to navigate the website. Please remember that this is not a financial advice and you should invest on your own research or take help of a financial consultant. Most of us have an option to invest in mutual funds through our work. They provide 401k or through our simple IRA, etc. Make sure you definitely invest. Many people just keep doing the research but never start to invest. Also, if it is automated, you won't have the emotions while investing, and that is good because you would dollar cost average over time while seeing your investments grow. It's just something you need to do over and over again. Only then you can reach towards the goal of financial independence. But the first thing is that we need to do research. I never put down my money before I do my research thoroughly. I do not want to lose money. Investing is always risky in itself, so I never want to over leverage and take more risk. Few things to keep in mind are: number one is that I need to find winners which have proven track record, and number two, we have to check the fees. Because fees can eat into your profit over time and can prove costly. But I do not mind paying fees if the fund is doing really well and giving me great returns. But nonetheless, the lesser I pay the fees, the better it is, as it allows me to grow my money. Another thing to keep in mind while investing is not to jump in and out of the market. Buying more when everything is going up and you are feeling really greedy, and selling out when you fear because everything is going down, as that would be the best way to lose your money. You just have to stay invested for a really long time. Okay, so now there are four types of mutual funds which I look out for. The first one is growth and income or large cap fund. The second one is growth. The third one is aggressive growth. And the fourth one is international. It goes from the most stable to the least, but all of them have their importance. So the growth and income fund is the most calm one in terms of being volatile. It goes up slowly when the market goes up, but also falls slowly when the market comes down. The next one is growth, which the name suggests it goes down faster than the first one and also comes down faster. And then the third one is the aggressive growth, which is where it's all your new companies, small cap companies. It is a more riskier area, so there could be where there are many new companies especially in the tech area, which kind of fail. So you have to be a little bit careful about that. And the fourth one is international. And international, it's as the name suggests, it's made up of international companies. However, you should always note that usually it is the American companies are the ones which are doing the best compared to the international companies. That's just something to keep in mind. Now, with that said, we'll move on to the Vanguard website where we'll see how to choose and select funds. On the Vanguard website, where I'll show you how to navigate. You need to go to Vanguard, then investing, then go to Vanguard ETFs. For this example, we'll take the ETFs. After that, you got to go down and select this link where it says browse the list of all Vanguard ETFs. Once you click on them, a whole list of ETFs will open up. Vanguard has over 70 ETFs, which will give you plenty of choice. So for example, let's pick up one fund just to show you how it works. Over here, let's select this MGK, because over on the right side we can see its performance. It has returned over 19% year to date, 27% this in the one previous year, and in the 5 years 15%, and 10 years 17%. The numbers, if you can see, are the highest compared to the other ones over here where it is compared. So we click on it, which will take us to the fund page. Over here you can see the product summary where it says seeks to track the performance of CRSP US Mega Cap Growth Index. Employs a passively managed, fully replication approach. You can scroll down and you can see over here that this fund is very heavily invested in the technology sector, which it comprises of 46%. So then when we move up, we can go on the next tab, which is price and performance. Once it's loaded, you can see over here that there's a way to benchmark it against. So we'll select the S&P 500 index because we want a fund which beats that. So over here we can clearly see that if you had invested $10,000 10 years back, you would have made a lot more money if you invested with this ETF. Your return would be 42,000 versus if you had just kept in an index fund, you'd be getting 31,000 odd number. So this is the way you can check how the fund has done over past, and it gives you a fair idea. You can select the years over here just to see how it has performed, and this is the first sign what we should look out for, because we know that a good fund will always beat the S&P 500, and that's what we want because that's the benchmark over here. Over here we have more information about the fund. When you click on portfolio, it will tell you that it's a growth and it's on the large sector. We can see that the top holdings over here are all known companies, all tech giants: Microsoft, Apple, Amazon, Alphabet, Facebook, Visa, Home Depot, MasterCard, Nvidia, and Adobe. Then you can click on the fees tab and you can see that the expense ratio is just 0.07%. So now when I have looked at the price and performance and the fees, this is something which makes me interested. It's the kind of fund which makes me interested to invest. So I'll dig a more deeper into this. And that's the way you find a good fund. You could also go and search on other funds back on the website. you just click over here, go and select the list of ETFs, and back you are on the list of full ETFs where you can go and do the same thing, same process. Now for the next example, we can take say VWOB, which is the Vanguard's international ETF. So again we just click on it. It takes us to the page overview. Over here you can see in the product summary again it attempts to track the performance of Bloomberg Barclays USD Emerging Market Government RIC Capped Indexed. You go to the performance page again, and then you see over here and change the benchmark it against to S&P 500, and you can see over here that if you'd invested 10,000 in S&P, you would have got a lot more than just this one fund, which for which the returns are just 11,000 over 11,000. So not that hard. So now for the next example, we can take say VWOB, which is the Vanguard's international ETF. So again we just click on it. It takes us to the page overview. Over here you can see in the product summary again it attempts to track the performance of Bloomberg Barclays USD Emerging Market Government RIC Capped Indexed. You go to the performance page again, and then you see over here and change the benchmark it against to S&P 500, and you can see over here that if you'd invested 10,000 in S&P, you would have got a lot more than just this one fund, which for which the returns are just 11,000 over 11,000. So not that hard. So we can compare the ETF to the S&P 500 index out here like this for any kind of any Vanguard ETF or mutual fund. The bonus tip I'll leave you all with is you can just go to Google, type in any mutual fund name or ETF fund name into the Google, and it will show you the graph. Once you're there, just go to the finance section of it. Then click on compare. Once you click the compare, over here you can select S&P again, and then you'd be able to compare both of these. Like right now, right now if you see these American Funds Capital Income Builder, if it's following the S&P but at a much lower returns, so that way we kind of know that this fund also does not look too hot. By this way you can compare different mutual funds, ETFs, or even stock prices to S&P 500 index. This is just a bonus tip. Alright, so this is it for this week. I hope you liked this episode of the Wealth Creation series. I will bring in more ideas for financial success next week. If you did like the video, learn something new, or just enjoyed listening, please give me a thumbs up by pressing the like and subscribe button. I make these videos for entertainment purposes only. I am not a licensed advisor. Please do your own research before investing.